Some welcome news for South African households, especially for those paying off homes or cars. In light of the challenging economic climate, the Reserve Bank has lowered interest rates, providing some relief. The Monetary Policy Committee has decided to lower the repo rate by 25 basis points, bringing it down to 7%. It's the first unanimous cut in months and comes as inflation cools and the rand shows signs of strength.
The recent data flow has been positive, suggesting that the economy picked up in the second quarter of the year.
But not all signs are pointing up. The Reserve Bank says the economy remains under pressure, mainly because of sluggish growth linked to supply-side issues like poor logistics and ongoing infrastructure challenges. Add to that a decline in both business and consumer confidence in the first half of the year. Still, the central bank is cautiously optimistic, expecting some improvements in the years ahead, driven by long-awaited structural reforms. To protect consumers' buying power, the bank is now setting its sights on the lower end of its inflation target, around 3%.
High inflation, of course, is a tax on the economy. And so South Africa's growth rate over time is impacted by the fact that inflation has tended to be higher than that of its trading partners. That erodes the competitiveness of the economy and it keeps your interest rates higher than you would otherwise have them.
But the global outlook isn't helping. Uncertainty around U.S. tariffs has added another layer of risk, and the Reserve Bank is watching the impact on local growth closely.
There are so many deals that must still be entered into. There is a lot of toing and froing. I'm sure you saw the statement by the Department of Trade and Industry. Those engagements are continuing. But as in the nature of negotiations, you can't tell which way it would eventually go. And that makes modeling for us a challenge. Not that modeling before the tariffs was not a challenge. It's always a challenge. But the tariffs just complicate it so much further.
In Melrose Arch, Trade and Industry Minister Bucks Dow says his department is also stepping in to protect South African industries while awaiting word from the United States on a key framework agreement.
I should say that we've had engagement with the U.S. government last night, both with the U.S. Embassy in South Africa, but also with the U.S. Trade Representative in the U.S. with regards to an update. I did indicate last week that, in fact, we are awaiting a template from the U.S. to be able to finalize our engagements with them. Unfortunately, we had not received the template, so we reached out to them to say, one, we require an extension because on the basis of the agreement we had with them that they would provide us a template.
If no deal is reached with the U.S. soon, a 30% tariff could kick in, potentially shaving 0.6% off South Africa's growth outlook. For now, households can breathe a small sigh of relief thanks to the rate cuts, but broader risks remain, both at home and abroad. For Newzroom Afrika on Channel 405, I'm Ntokozo Khumalo in Pretoria.